Hey, welcome back to YT Finance, and today we are going over the latest stock market news updates that you need to know, so let's dive right into it. Stocks have broken free from their recent slump, and they've gotten some fantastic news. For instance, the company named Salesforce has raised their overall prices, and Zillow received a much-deserved analyst upgrade, which is fantastic news for Salesforce and Zillow stock investors. But let's quickly put the spotlight on Coinbase, which has skyrocketed an astonishing 73% since the SEC sued them for securities violations back in June. Due to this overall surge in the price of Coinbase shares, Cathie Wood of ARK Invest sold a whopping 135,152 shares. Now, this is nothing to be worried about because I think she is simply taking profits and may buy more Coinbase later in the future at a much cheaper price point. Now let's switch gears a little bit to talk about the macroeconomic economy, which directly impacts the overall stock market. Picture this. We've had a budding rally in the overall stock market coming in at full swing. But what could quickly put an end to this rally would be extremely hot or high inflation. So we are currently waiting for inflation metrics to come in. Investors are eagerly awaiting the consumer price index for the month, and they are hoping that it shows a continued decline in inflation. However, if the opposite occurs, this could negatively impact the overall stock market and your favorite stocks. But it's not all doom and gloom. For instance, Microsoft's takeover of Activision Blizzard has been cleared for landing. Despite the FTC's attempt to block the $69 billion deal, a federal judge disagreed, emphasizing that it would actually provide customers with more access to Activision's blockbuster games, which is fantastic news for Microsoft. However, we are not out of the woods yet. For instance, this deal still needs to be approved from the UK regulators, but they have indicated that they are likely to give it the green light, so it's game on for investors who have invested into MSFT stock. In other news, Bank of America has been slapped with a hefty $250 million worth of fines for those pesky junk fees that were charged. The Consumer Financial Protection Bureau, also known as the CFPB, is waging war against these fees, and Bank of America has been caught in the crossfire. These fines come as a result of various consumer abuses, including opening credit card accounts without consent and improperly withholding credit card rewards. Essentially, Bank of America has done some shady dealings in the name of various customers, and this is a reminder that we need to keep an eye on these financial institutions to ensure that they are playing by the proper rules. Now, if this causes their overall share price to decrease, I personally will buy up more Bank of America stock because they are an amazing investment and a very good financial institution. On another better note, Amazon recently announced an exciting partnership. They have teamed up with Priceline for their first ever Prime Day collaboration with an online travel agency. As consumers start to shift toward experiences rather than buying material goods, this move allows Amazon to join the Travelpalooza. Imagine getting 20% off Priceline's Hotel Express deals during Prime Day. Honestly, it sounds like a pretty sweet deal, and I think Amazon is genius for doing this. But naturally, there is a catch. With Express deals, you won't know the exact hotel until after you pay, but you'll still get essential details like star ratings and a location for that hotel. Due to consumers gravitating away from buying physical items and now gravitating towards and using their capital to spend on travel and experiences, this has negatively impacted the top of the line for various online businesses. However, this is fantastic news for investors who have invested into Marriott or Airbnb, which host these types of consumers. This is another reason why we've seen travel-related expenses remain steady as consumers seek out getaways away from their everyday lives. This is why analysts currently anticipate economic uncertainties, which may lead to further smaller online shopping carts, which would then generate less revenue for online businesses such as Amazon. Next up, let's talk about Bitcoin. Did you know that every 4 years, the reward for mining a block of Bitcoin is cut in half? This is known as the halving. This reduction slows down the rate at which Bitcoin is produced and mined, helping ease inflation pressure. And naturally, Bitcoin can't be created, there's only a set amount of Bitcoin, but the ones that already exist can be cut in half. Multiple halvings have already taken place, and the next one is expected in April. And if Bitcoin's price or mining efficiency doesn't increase, it could impact the profitability of the people who are currently mining Bitcoin. Now let's switch gears to talk about the world of entertainment, specifically AMC and their overall share price. AMC's premium members are on a movie watching spree. They are absolutely binging theater movies. Over 20,000 same-day tickets have been booked to see Barbie and Oppenheimer. These new films, along with the upcoming Mission Impossible, have the potential to lift the summer box office numbers out from its slump, which is fantastic news for theater chains such as AMC, and of course their stock price. In some not-so-positive news, a Yale study has accused companies like Heineken and Unilever of continuing to operate in Russia despite their promises to back out. On a lighter note, Tesla is making headlines again because there are rumors that they are internally investigating plans to build a lavish glass house for none other than their CEO Elon Musk near their Austin, Texas gigafactory. More good news for Tesla is that Citigroup has raised its price target on Tesla regarding their TSLA shares to an impressive $278 from the original $215 price target, which is phenomenal news. We also have an update from Jim Cramer, who has some advice for investors, and normally I don't agree with him, however this advice is pretty good. He recommends sticking and investing into his Magnificent 7 technology stocks that are currently leading the overall market, and I completely agree. The stocks which make up Jim Cramer's Magnificent 7 are Apple, Amazon, Google, Facebook, Microsoft, Nvidia, and Tesla. And honestly, I love and own all of these companies, so why not buy some more? These 7 technology stocks clearly are powerhouses in their own markets, and they have captured the interests of various investors, and I think they will continue to shine going forward. In the world of food, we see Domino's Pizza, another fantastic stock to own, having fantastic news come out about them. They have announced a partnership with Uber to list their menus on the Eats and Postmates food delivery apps across various markets, which is going to help them out a lot. Speaking of food stocks, let's also talk about the latest news updates for Chipotle, which has come up with an ingenious solution to the labor shortage that we are experiencing in the restaurant industry. Chipotle has developed a robot that is capable of cutting, coring, and peeling avocados, which they use in their mouth-watering guacamole. This is going to save them on labor costs and also help them issue new restaurants and save money. In my opinion, this is a brilliant move by Chipotle to ensure that their customers can continue to enjoy their scrumptious offerings even during challenging times for the restaurant industry. And with that being said, that's all the news we have for today. The exciting world of finance and the stock market never fails to deliver surprises, so make sure to subscribe and stay tuned for more videos just like this one. Until next time, I wish you happy investing.